Hi folks, and welcome to Tech Talk. My name is Anu. My guest today is artificial intelligence influencer Kartik Gada. Come join me. Hey Kartik, and welcome to the show. It's great to have you here.
Thanks, Anu. Thanks for having me.
Of course. So you are quite the influencer when it comes to artificial intelligence and fintech technologies. You travel the world giving keynote speeches. You have authored a book titled The Atom. You you're an ongoing lecturer at Stanford University, and you advise CEOs of some of the most disruptive companies. So my first question to you is, how specifically will artificial intelligence impact our lives in the next 20 years?
Well, there's a couple ways to think about it. Artificial intelligence is in some ways the ultimate technology. It kind of supersedes everything else. It's the end game of the grand scheme of things in some ways, but that's further than 20 years away. Within the next 20 years, there's so many small technological disruptions that seem invisible to most people, but are changing businesses and the way people interact with everything they're doing very completely. And this is not widely understood because in the media you hear that AI is taking away jobs, but that's not actually true. It's actually creating more net jobs than would be taken away. And it is enabling more types of businesses to form that could not have formed before. So it's actually a golden age for entrepreneurs, partly for that reason. And over the next 20 years, a lot of assumptions we have about startups, small companies, all the way up to the biggest governments are going to be fundamentally transformed because of artificial intelligence, eventually speeding up almost everything that we do.
Interesting. So that leads me to my next question here. I want to refer to your book. Based on your book, The Atom, which is very popular, by the way, great read, your belief is that technology deflation will lead to supercharged universal basic income, and for that there will be a need to implement that. And I'd like to hear your thoughts on that for implementing it and not creating government debt.
So universal basic income is something that is rising a little bit in popularity, but every other proposal out there, including the one from recent presidential candidates, are really just the same old notion of taxing some people to give to other people. And that is just socialism in a sense, and that's not going to work. I contend that something analogous to universal basic income is only possible by reducing taxation on people, because then you create more entrepreneurship, which leads to more technological deflation. You monetize that technological deflation through the central bank, which has already been going on. $25 trillion of money has been created by the central banks of the world in the last 9 years, and there's still no inflation. The price of oil fell by half, the price of gold fell by half, and that number matches up exactly to the estimated amount of the entire economy that comprises deflationary technologies. Once you recognize this relationship, then you can start replacing government spending dollar for dollar with this monetization of deflation, and therefore fund the government with less and less taxation on humans, eventually taking humans from a current high tax rate to a low one, then zero, then maybe even negative over time, with artificial intelligence making up the difference. In other words, if we believe that AI is doing a greater and greater share of work in society, and some people think that means it's taking away jobs, but if they're doing a greater share of work, then it logically follows that it should take on that proportional share of taxation and take taxation burdens away from humans. So that's the fundamental thesis of the book. Since we are under an accelerating rate of change and the speed of advancement of artificial intelligence is such, this is technologically and economically possible not very far into the future, maybe just in the 2030s, as soon as that may sound, just because of the accelerating rate of change inherent to these technologies.
That's very interesting. Your book, The Atom, has created quite the buzz. Tell me about your inspiration for writing it.
Well, one could say the idea goes all the way back to 2010, where I wrote some articles about how more and more low-tech industries and products were converging to high-tech, and by high tech, we mean something that is deflating very quickly year over year. Like we used to have tube TVs that were very deep, they were cubes, and the price didn't go down very much year over year. Then we have now these high-tech LED TVs, and they get very cheap. So it became technological. But I found that no one was calculating the impact of all this to the macroeconomy. People see these examples in isolation. Their computer gets cheaper, the TV gets cheaper, but not rolling it up to the top. At the same time, we embarked on something called quantitative easing in 2009, first the United States, and then followed by Japan, China, and the European Central Bank. And all this money that they were creating and they thought would cause inflation just wasn't causing any inflation. But the economics profession doesn't really know anything about technology and is still stuck in paradigms from 50 years ago when you did print money, it caused inflation. Now that's no longer the case, and the numbers match up exactly. And I thought, this is the biggest monetary and fiscal conundrum of our times. And the upside is immense because we're talking about creating a more robust and dynamic and exponentially rising safety net while simultaneously reducing taxation of people. And just the freedom inherent to that and the kind of modernization of all aspects of government, society, and fiscal flows just seemed too compelling to not write about. So I took a lot of time, wrote that book, and have been kind of pushing this idea since that time, and we'll see where it can go. Because I believe historically, it will eventually become an inevitability, if not in the US, then in some other country.
My next question to you is about your advising CEOs of disruptive companies. What is it that CEOs, what are some of the key topics that of your insights that CEOs are looking to understand?
So there's two extremely important dimensions of what a CEO has to adjust towards, and as soon as possible, because this is coming upon all sorts of companies very quickly. One is low tech going to high tech. If you have a low tech business, but it gets absorbed into the technological megatrend or accelerating technonomic medium, which is the title of my book, then the CEO of a low tech company isn't prepared to reorient the way their business is done. Are you accustomed to a large portion of your inventory dropping in price very quickly, like is true of technology? Or the need to implement more and more types of automation into your business? So a lot of CEOs don't know where to begin with that, so they come to me. The second one is implementation of AI internally as a function of human resource management or just workforce management. Because as we know, when any CEO comes to the job, the first thing they ask, can they manage people? Can they manage managers? Can they manage an organization 3 or 4 layers deep, 10,000 people? That's what a CEO does. But equally important, if not more, is can you get more done with the same number of people by filling in the gaps with artificial intelligence, or even create new divisions that have relatively fewer people, therefore enhancing profitability? That's just as important of a skill set, because if AI does a lot of the work that humans do, then using AI in your business so that you need fewer people to get the work done or can do more work with the same number of people is just as important as the concept of managing an organization of people. And very few CEOs have caught up to that. So that's what they come to me for.
I see. You have said that technology is going to disrupt, especially the C-level positions like the CEOs, CFOs, and CTOs. And the people that are in these roles today need to start implementing more of a technological component to the way they think.
Yes.
Can you elaborate on that?
So what they have to think about is, are they hiring too many people relative to their competitors who might be using artificial intelligence and saving that money, thereby having more resources to deploy in what AI cannot do, like say for sales? And to be even slightly behind in that metric can lead to the upper management of a company just having their company fall behind, not because they did anything wrong relative to a few short years ago, is that they haven't really kept up. So that's in a broader sense of a C-level executive. A CFO in particular has so many types of outdated mechanisms, tasks, and procedures they have to go through, whereas through AI as well as through fintech, there's a lot of things available, such as digitization of cap tables, more and more artificial intelligence around business analytics and insight. So either they need less staff or they can get more real-time data, which enables more precise business decisions. Then in an investment banking and M&A advisory capacity, a lot of companies that I speak to, they either have to acquire a capability and infuse that technological knowledge and AI diffusion into their companies, or they have to think about how they need to position themselves for a merger with a company that could either provide these insights, or if the first company is more advanced, where they could create that capability in another company, because there's too few CEOs and CFOs who are really knowledgeable about this, thereby creating more opportunities for merger and acquisition than might have existed traditionally.
I see. You have also said that this is the best time ever to be an entrepreneur and or a CEO. What are your reasons for that?
Well, the media, which of course is in the business of not making people feel good, but is in the business of either making people frightened or angry, will tell everyone that their jobs are going away. And in most countries, certainly the United States, people are trained to think in terms of my job needs to be guaranteed, whether my job should exist or not. The government has to guarantee my job. It's much better to think in terms of not just jobs created, but output generated, tasks automated. Because if one is to believe that some jobs are being automated, then does not it logically follow that the employer, the boss, is saving that money and pocketing that money? Therefore, the employer's margin became very high. And the natural reaction should be, well, don't feel bad that your job away. Find a way to compete with your boss because he's making all that margin. Extend that to the entrepreneur. If you see a chart saying these are the jobs that are going to be automated by AI, like I said, the average person will just think, oh, is my job high on the list? It's going to be gone. The entrepreneur should see, these are all the functions I can get done without hiring someone. Maybe I can create a large revenue stream with very few people. In Silicon Valley, there are companies that have $10 million a year of revenue and only 3 human employees, because the other 47 humans worth of work is done by AI, which itself then resides offshore in a tax haven and makes the whole corporation a low-tax foreign corporation. There are AI companies that have $100 million revenue and only 40 employees because they do so much internally through AI. So the entrepreneur today, if they know how to implement AI, could very well say, hey, let's see how far I can get just as a solo. Can I get to $2 million a year revenue just as a solo? And the magnitude of opportunity here because of automation is just immense. So it is the best time ever to be an entrepreneur, since AI can work for you, thereby creating new types of businesses that could not have broken even before.
Kartik, tell me about the M&A landscape in artificial intelligence.
Well, it's an interesting question because there haven't been that many exits of artificial intelligence companies above a certain size. In the last 18 months, there's only been one company above $100 million and maybe 3 that are above $50 million. There's a lot of acquisitions of smaller AI teams, acqui-hires as we call them, but that is by far the majority of deal flow. So artificial intelligence M&A is yet to happen in the future because the valuations are still very high for the few transactions that occur. About 20x revenue, but all the existing companies are not going to be sold for 20x revenue. So a lot of acquirers are in a wait and see mode, number one. Number two, since artificial intelligence drops in cost very quickly, another example of that rapid technological deflation we were talking about, what used to cost $100,000 a year to subscribe to as an artificial intelligence platform only costs $10,000 and $5,000 a year right now. And Google keeps publishing these open source libraries. So the only AI companies that will succeed and will get acquired are ones that have very domain specific applications for one or more industries. And that process is still ongoing, so we don't yet know who the few winners are going to be, but there's not a lot of M&A of AI companies right now for this reason.
What are your thoughts on the role of AI modernizing private equity?
So it's a very exciting time for private equity because Fundamentally, what private equity does is acquire a company in a distressed state for a low price, bring in their capital and other resources, even their people, expand the margin, expand the valuation, then sell it. Artificial intelligence, just the inherent nature of what it is, can speed that up very greatly because you may need fewer people to increase the profitability of that company, do it in a shorter time, thereby increasing the velocity of acquired company turnover within private equity firms and therefore the returns as well. So this is a very natural evolution that private equity has to go through. And I am connected to a couple of very good applied AI companies who are talking to existing private equity firms to kind of be their in-house AI engine that diffuses the right type of domain-specific AI on each individual company to just speed up the value creation process in private equity. So private equity could stand to make a huge amount of money through intelligent deployment of AI into their philosophy.
When you're out doing your keynotes, what are some of the key points that you are conveying to your audience?
Well, one was the one that I had spoken about earlier about think like an entrepreneur. If any job is being automated through AI, find a way to use that AI and create an unlimited supply of labor of that particular function internally. But other points I point out is to think about what AI might be doing. Don't think like a human, because the other problem with those lists of jobs that are being automated, they'll list, say, telemarketer, accountant, real estate salesperson, things like that, all private sector jobs. You don't see government jobs on those lists, when in fact, it would logically make sense that a lot of government jobs could be automated through AI, because are those so difficult that AI cannot do them? Now, yeah, the government will not go in that direction willingly, but there's a lot of countries and a lot of subnational entities, states and provinces in the world that could deliver government services for 1/10 or even 1/100th of the cost, and by that same logic, charge a lot less tax. So I speak to a lot of international audiences, given keynotes in China, in Brazil to an audience of 3,000, at the European Parliament in Brussels, place like that. And I point out things like this, that artificial intelligence doesn't have these biases, because even the humans that make the lists of jobs being automated will only list private sector jobs. AI doesn't care. AI will effectively work at any unproductive opportunity and make it more productive. And I encourage entrepreneurs to think about disruption of the governance sector, as we call it, because a lot of tech entrepreneurs are only addressing a market opportunity of $2 or $3 billion. That's the typical tech startup. But I said, what about the $25 trillion market? And that is going to be one of the biggest disruptions of the next 20 years for sure, because it is the largest amount of dollars at the lowest level of productivity out of the entire world economy.
Let's talk about your hedge fund. Your hedge fund operates predominantly on artificial intelligence. It exceeds the market. How does AI make this possible?
Yeah, so I have a hedge fund with my co-founder called Lakewood Asset Management, and artificial intelligence has just enabled us to put our algorithms into such an automated way that we don't have to spend any time on it, enabling lower fees and lower minimums, so a democratization of hedge fund access. Hedge funds are not available to, say, average investors, but in this case, we have crossed those cost barriers because not only does it dynamically calculate everything we know about futures of, say, an index like the S&P 500, volatility futures, that's another class I teach at Stanford. And what that does is to just make sure all the trades are executed without human involvement, and therefore we don't have any staff, any analysts in the office or things like that, and that enables lower cost. And we continually beat the market because our algorithm captures volatility. The more choppy the market is, the more we outperform the index by. Even if the index is down, we'll be down less and get to the high watermark faster. So this is a disruption of the hedge fund sector because hedge funds in general charge a 2 and 20 fee structure. 2% of assets and 20% of outperformance, which is a lot because even if they beat the index pre-fees, they're not beating it after fees. Our fees are 1/4 of that, only 1 and 0. And we have a minimum of, instead of 1 million, like most hedge funds charge, only 100,000. All of this is possible through AI. What AI has not been able to automate is all the paperwork compliance stuff, though, for that. So that's the only part that takes our time, not actual asset management. And it's an example of a lot of jobs done by humans being eliminated through AI, but then creating a product that's much more democratized so that ordinary people can have hedge fund type returns, which outperform the available indices by a lot, and also recover from market corrections at a sooner rate. So that's another kind of democratization of product availability through AI.
With your perspectives of the future, how does that impact your investment thesis?
Well, I figured out a long time ago that individual stocks are no longer a good use of any individual investor's time. The index is available to everyone, but then how do you enhance the index? There are methods like options and futures, but there's a lot of innovations in options and futures, new types of options on ETFs and things like that. So I teach about that as well. But then, because you have brokerages that allow software programs to interface with the trading interface, then you can do a lot of things without paying attention to it. And when I combine the fact that I think stock picking is not a good use of a person's time, or angel investment even is not a good use of a person's time unless they're really, really, really a big name person, have a lot of money, and can be in 20 or more companies. Combine that with what is available through the instruments of options and futures and the AI automation of that, I just find that to be very, very compelling. And we have had very high returns for a long time. And I teach people how to do a good portion of this through the options and futures class I teach. Not all of it, of course, but I teach a good portion of that. And that's kind of the wave of the future, because not a lot of investors are really measuring themselves against the index, let alone enhanced performance of the index through artificial intelligence. So there needs to be just that type of awareness. And I have not done any individual stock investment since 2008, and I haven't had any need to.
I see. What are the different classes you're teaching at Stanford University?
So one is options and futures, practical applications. And that one I've taught in 2017 and 2018. Then the second one, which had pretty high attendance, 45 plus people, is the new economics of disruptive technologies. So I teach people how to think like a futurist, understand the accelerating rate of change, how everything we do gets faster and faster, and then go through the most disruptive technologies and how they are disrupting incumbent industries. Artificial intelligence, fintech, blockchain, 3D printing, AR, VR, construction, transportation technologies, space exploration, IoT, all of the above. It was a 9-week class.
Where does one learn more? What are some of the best resources if one wants to learn about futurism?
Well, futurism is a complicated subject because there's a lot of people who call themselves futurists, but they don't actually make any predictions. They are only evangelists of a certain technology. As far as futurists who make predictions, the most famous is Ray Kurzweil, although he's been less active recently. My blog, which is singularity2050.com, has been in operation for 13 years. I have a track record of many prescient predictions, including that oil prices would crash down, it wouldn't be higher, there would be no such thing as peak oil. There would be no such issue in the adoption of electric vehicles, how it's an inevitability that it displaces internal combustion engines by a certain date, and so on. To become a futurist, you really have to look at disruption in terms of how overdue a disruption is, the legacy industry, what are they operating at versus what's technologically possible, how long has it been in that behind the times state, so to speak, and then that gives you an idea about when a disruption might occur, so that not only enables someone to think like a futurist, but if someone's an entrepreneur or a venture capitalist, they might get more precision in deciding which areas to focus on, and therefore which areas might have the highest upside, and narrowing down the field somewhat.
I see. Wow, very useful information. Thank you so much for coming on the show. It's been great to have you here, and I'll keep following up on all the great work that you're doing, and hope to see you again very soon. Thank you.
Thank you. Thanks for having me.
Folks, thanks for joining us. We'll see you next time. Bye-bye.